Good morning, guys. So it was a nice move up yesterday on gold. Okay, if you watched the video analysis I posted on Monday, that one actually went out on YouTube as well. You would have seen that the plan was for price to break above this level, come back down, retest, and then away to go. This level here, so it's 29.08. So we've got another couple of daily levels. We've got a daily level here, which I've just marked off. Okay, bottom of this downwards facing candle, because the next candle is green, it's bullish. That's now our daily support level, right? So we've moved up. We're now currently sitting quite nicely above 29, 28, 40, which is the daily level that we had as a target yesterday. Now, there was quite a big gap between these levels, which allowed us to have quite a nice trade, 200 pips. So we just moved down to the 1 hour time frame. Okay, this was the trade. This was actually 5-minute bitch candle trade, okay, which I did get in, but I was covering a loss from earlier on in the day. So you know me, I trailed my stop loss, and I actually came out just above 1 hour, which it gave me 0.3, 0.4% profit for the day. It was touch and go actually, because it was only a 1 minute candle that wicked me out. Otherwise I would have caught the whole move, which a bit of a pain in the neck, but that's what happens. Now you can see that we're currently trading above this daily level here. Now the last time we was up here, 3 times we moved down, second time moved down, third time it's questionable whether or not we actually stay above this level, go break all-time highs, and start heading up towards the $3,000 mark. I think the 3,000 is inevitable. We're currently 690 pips away from that level. Now, you know what gold's like. It can actually do that in a day, right? Just turned 7 a.m. So Frankfurt Open has just happened. There's a couple of ways that I would consider getting into this, right? Because on the 1 hour, there's imbalance here, right? So we just zoom in a bit, and oops, this, I don't know why that happened. This imbalance here looks like it's being used right now by Frankfurt. Okay, that would give us 2 all-time highs, 115 pips if you enter right now. I'm not going to enter right now because my rules say I've got to stay out until London Open. Nonetheless, I think there is potential for an early entry here, because if gold is to keep going and break these all-time highs, I would move to break even if we tapped into this all-time high. And what generally will happen at all-time highs, just to give you a bit of an idea, it would do this. It would tap it. If it's going to break, it will accumulate something like this, dip down, and then it would just blow through. When it comes back down, sometimes it doesn't come all the way back down to the all-time highs to retest, and then it just keeps going, right? So that would be my plan. I want to see a little bit of a deeper pullback, right? What I want to see is, I want this fair value gap here to come into play, right? Because it came down. If we put our Asian session on, we're now adding confluences, right? So what I want to see is, I would like for the Asian low to get taken, right? There's liquidity at the Asian low. I would also like just a tap or come somewhere near to this fair value gap. And then what I want to see from there is, I want to see price just do this, because I want to have a run up at this level. And if the lower my stop loss is, the better, okay? Because I can trail at 1 hour, trail at 2 hour potentially. And once we get through this level, we just, as soon as we blow through it, you move your stop loss to the all-time high position. So move it to about 29.43, 29.43 probably would probably just about do it. As soon as you get past that level, you move your stop loss. I'm looking for this. It all depends on how aggressive the market's open. If there's a lot of volume on London, then it could just go without us, and if that happens, then it happens. There's not much you can do about it. The alternative is that we actually don't go to all-time highs. Now you can see that I've got this imbalance here. If that happens, I would look for a retest on the daily level, right? If we get a nice retest or just a tap off it on the daily, there's a high chance we could come back down to this daily here, which, and we know the price difference between these two dailies is 200 pips, so it could come all the way back down, right? Failing that, there's an accumulation here, which is the Asian. If you were to look at the daily, okay, we've actually got the daily wicks all the way down here. So this daily wick to the high, gold moved 446 pips yesterday. So if it was to pull back, 50% of that, it can still pull all the way back down here, and we could potentially have another chance to get into a bit of a swing up. But this daily definitely seems like it's holding for now. If it breaks all-time highs, we need to wait for some form of area here for a retest, and then potentially a second entry in New York, because if it was to just go from where it is now, it could come down. It could retest the all-time highs. I mean, that's possible. But if there's any form of structure or reaccumulation form above this level, we can use that for another entry and just follow the price action. So in terms of the candlestick anatomy and the way that I've taught you all how to read the structure of the candlesticks, we wait for a secondary setup. But for now, my preference is this fair value gap here, because it fills some imbalance. It takes out the Asia low, okay, so it takes the liquidity from there, and what it also does is it starts to entice sellers into the market, so that in its own would create an extra little bit of liquidity. Right, if we take a look quickly at the DAX, right, the DAX seems to be running out of steam. I would suggest we've actually formed a daily support here, okay. If you look at this candle, that's actually closed bearish, right? So this is now our daily resistance level, okay. Now DAX could potentially come down all the way down here, and there's imbalance here, right? So this is the daily imbalance, okay. Now drop down to the 4 hour. Let's remove these drawings, remove that. Okay, so we've just got zero volume. Okay, that's pretty normal through the night on DAX, because it's European indice. Okay, not much going on in Europe overnight. If we come down into this level and start forming some sort of reversal pattern, so we'd look at the wicks, we'd look at the closure of the candles, and then we look for reversal wicks, inline wicks, and enter on the basis of the 30-minute candle reversing. We could have something down here. If we just drop down to the 1 hour, in order to get down there, obviously the Asian low and yesterday's low, so anything that you may take on DAX may be a little bit aggressive. We've got some GBP news later on today. I think that could potentially, it will affect the DAX in some way, shape or form. And we'll take a quick look at NASDAQ as well. Now, I last week was planning a trade off this level here, which didn't quite come into contact. But if you look at the daily, okay, this daily was marked. We've come down to it. We've filled this imbalance here. Okay, so there is imbalance right here. It's just come down, wicked out the bottom of it, and then it's closed back above this daily level. So, in fact, we only got one single 1 hour closure below it. So it's quite an aggressive daily stop run by the looks of it. We've got some equal highs here. So potentially I would now ignore this and I would look at this level here. Okay, so DAX may pull back to this level. Okay, and if you just look at this area here, right, what could potentially happen is, because it seems to be going sideways, right, This could be the left shoulder of an inverse head and shoulders. That could be the liquidity grab. This could be the right shoulder, the formation of part of the right shoulder. So if we were to come down here, we could then trade back up to the equal highs here, because these are quite blatantly obvious. If something stands out as obvious as this, price will generally target it. All we've got to do is find a way in. So if we follow the rules, we've got some kind of structure here, which obviously could potentially then act as, right hand side shoulder or left hand, right hand side shoulder. So I'd wait for DAX to come down here, and then again we've got something like 100 pips, 110 pips, and then potentially it will go through. All right, so that's the analysis for today. If you need any help, hit me up in the chat room. As always, I'm more than happy to help, and let's see if we get some nice profits today.